Good morning, everybody. Sorry to tune us. I just wrapped up another live session, and here we go. So happy Monday. Limited trading this week. I will be running the daily profit plan on Monday, Tuesday, and Friday this week. Christmas Eve, I know there's limited trading. I'm not going to look at the markets. I'll have my phone on me. That's about it. No live session on Wednesday, Thursday this week of the holidays. No live sessions on Christmas Eve, Christmas Day. If something happens, I'll pop on, do a video or something like that. But I would suspect that today, VIX is down below 15, unless we get a big old fat VIX spike. We did have a VIX expiration last week. This time of year, VIX is going lower. Markets have had a pretty good run here through that 2-day holiday stretch, or getting into holiday trading rather. So we're looking at markets this morning. I would say, if it's a nothing burger in direction, that's great. If it's a positive drift, up to the high 68s, maybe even testing 6,900 again, that's fine. I would look at the trades that we placed for some of our bonus trades these last couple of weeks, which include our SPX broken wing butterflies as well as the butterfly spread. So here is the end of year rally. That's what I'm looking for. This one, so this butterfly spread, if this is accurate, we'll see what this one traded for this morning. If we're heading higher today, could we get this trade up? That was the $2 broken wing butterfly. It's already up 135 bucks. If we have the same thing here, this would be the 5 and 10. So that's a broken wing butterfly. It's already up 120 bucks. I wouldn't mind taking profit on those if this registers today with similar gains. If we're up 140, up 130, if we're up over $225, 250 bucks, I might just take the profit. And then the year-end fly, if we're getting into that like 69, this is out to the 31st. Same thing. It's like we talked about this last week. If we're testing 68.50, testing 6,900, we might see this trade up about 100%. And you can see it's showing 95 cents right now. So if we have on these trades, let me get the chat up for everybody here, by the way. I'm not seeing comments. Give me one sec. Everyone, chat is on. Can everyone hear me? Give me some Y's and S's in the chat. Ernesto's here. Tom is here. How's my audio? I just finished a live session, so my audio setup should be pretty good. All right. So Mark says no volume. I would just check your settings, log out, log back in, check and see where your audio is coming from output-wise. Could be on Zoom too. All right, good stuff. All right, so let's continue. How many of us have these trades running? Year-end rally, year-end fly. So this one's my profit trap. The year-end fly is, price is here, and we have the profit trap set all the way up to the 69.75 area. I am not looking to get price into 69.75 and hoping that it gets there by December 30th, December 31st. Like, that would be amazing if it does. But if we are up, 100% by going higher today or going higher tomorrow, I'd say we just take the profit. That to me is a safer trade, because right now that butterfly debit spread, the actual, like, this yellow triangle, this yellow trap is like at expiration. But what we have right now is we have the trap that looks like this too. Okay. Our real P&L is much wider on the left side and the right side versus getting closer to expiration when that butterfly trap gets more narrow based on our exact strike prices. So if this thing that costs us $1.05 is going to offer us close to $1 profit, I think that's worth taking the profit, especially if we have, over 200 and some dollars on the other trades. That would give us a nice little Christmas bonus, right? If we're up 350 bucks, 400 bucks total, it's a nice little Christmas bonus. Could be worse. So I might just, be happy with that. It could be today or tomorrow. If the market's going to be up at all, great. Christmas Eve, limited trading. Christmas Day, markets close Friday. There's no major news this week from what I saw. I don't think it's worth taking. Look, unless you have a backup plan, unless you're talking defense levels, unless you're watching your VIX levels and you want to sit and trade stuff all day in a zero DT environment, I don't think a standard daily profit play is going to be great. It's like the market today is expecting a what? Plus or minus 27.8. Okay, fine. But could it easily drift 30, 40 points higher? I was not in the office on Friday. I was traveling, but I did see exactly what the market did. So if you traded within the first few minutes of the day, I know that your zero DTE would have been very difficult to stay in the range, right? How many of you traded on Friday morning to see the market go from 91 within 15 minutes, goes from 91 to 23? That's a 30 plus point move in 10 minutes. I know that there's no way a zero DT environment would be awesome unless you were going to be 50 to 60 points out of the money. So I wasn't sure what the plus or minus was in the morning, but I would imagine that that plus or minus was probably a 30-ish, 30, 35. And we went basically the entire expected range. There's a 40-point move, and we stayed there for the entire day. So who can tell me what was Friday? Like, if you traded it, hopefully you know what the levels were. But if it was a plus minus, um, plus minus 35, it didn't stay inside that market maker move. If it was a plus minus 40, which I don't think that it was with the VIX going down, you'd have had to trade a pretty low delta to keep that trade pretty safe. If you waited 5 minutes, well, you're probably okay, right? If you waited 5 minutes and let that first candle pop, then you were able to go hopefully far enough out of the money that this trade never had enough movement to the upside. So after 5 minutes, a little indecision, market only moved about 24 points from there. So if your plus minus was 30-ish and you were, putting in your trades about 35 to 40 points away from that as a center price, you could have gotten away with a nice little win on Friday. Okay. Nesta says took the trade 935. Larry said at 68.55. Okay, good. So that was already safe. 10 wide for buck 40, got out 1 Eastern time at 75 cents. Okay, good. So almost a 50% gain there, Larry. Nice, man. Good. All right. So, I mean, I had a feeling everyone would be looking at it at least, or if you're trading it, great. So I will recenter this. This will be the screenshot from Friday. I didn't trade on Friday, so that's a no trade for me in our tracker. Okay. Let's see here. Friday would have been the 19th, 18th. Where's my ATR tracker? So 17, 12, 18. 12-18, I didn't get filled. So I did take a winning trade on 12-18. So that was everything stayed the same on the 18th. Closing price. We basically had the market opened at 77 on Thursday, closed at 74. So we had a 3-point day. And then Friday, a little bit more direction. It popped right at the open. So close at 68.34. And that was the 19th. All right. So I was out of off, but so the winning trade we took on Thursday was the kind of the wider. It was a broken wing put fly down here, and it was worth $50 per contract. So I filled for 50 cents. I let it expire 50 cents. I was watching. I thought when this actually came down a little bit, I was like, we might actually get a bit of that profit trap. It didn't work out that way. We stayed pretty firm around that 60 handle. So 68.60 stayed pretty firm. But we had that, if you remember, it was a 68.40 by 68.30 by 68.10. So we had a 10 wide profit trap and then a 20 wide credit spread. I was risking 950 to make 50 cents paid, 50 cents held, full profit there. Profit trap was offering up to $1,000, which would have made things pretty exciting for a Thursday. Didn't happen, didn't need it, but our break even would have been all the way down to 68.20. Our break even was like 68.19.50. So I was actually pretty happy with, obviously letting a trade go for a full winner, but somehow if we squeaked in a profit trap, that would have been pretty sweet. What? I didn't hear that. Ratty says Jack Carter broke his leg. Oh my gosh. That's not good. That is not good. Well, hopefully speedy recovery. Was it a skateboard or was it a hoverboard? Those are always tricky, man. Hoverboards are a little crazy. But yeah, skateboard, probably not a good idea for Jack to be on a skateboard. Crazy. Well, I hope that's not the case. But I believe it. I actually fell on the steps this morning with my dog. Didn't get hurt. My fiance fell on the steps yesterday with our baby. Nothing happened. It's just like, what the heck? So accidents be happening. Anyway, hopefully Jack's okay. How was the game? Games are great. It was nice to see everybody. It was ridiculous. The travel was so stupid. I mean, we were up. We I think we left here at like 5 a.m., 5:15 a.m. on Friday our time. We did. I mean, we got a flight. I mean, we fly like non-rev. My fiance works in the airline industry, so she knows all the numbers, and we fly non-rev, and it's great. Like everything's really inexpensive, but you can get bumped if you don't have seniority. Our goal was getting from Salt Lake City, Chicago, grabbing a car, driving 2.5 to 3 hours to Central Indiana. Um, and so we did. Now we stay for a couple of days, and the flights only looked good like early Sunday morning, and the flights all of a sudden started to look terrible on Sunday. And so we decided like we have to scramble, maybe looking for other airports. So we end up doing a transfer instead of going to Chicago again, which should have been leaving at like 3 in the morning, driving to Chicago, dropping off the rental car, going to our flight, and hoping that we would get on when we're like maybe at the bottom end of the non-revs, and we probably get bumped from standby and it's a full flight. So we transferred to Indianapolis, and then Enterprise was like, you can't do that. You can't transfer the car. I'm like, I've done this before. It's like a flat fee of, maybe $100 or $50 or something to transfer. Like, well, it's showing up in our system as $350. I'm like, that's insane. What the heck? So anyway, we're really annoyed, and it was kind of stressful. So long story short, we did end up getting the transfer to Indianapolis. They said they're going to charge us $250, but then when we got to the actual Enterprise drop-off location in Indy, they waived it, so it didn't cost us any more money. We dropped the car off. We had an easy flight on Sunday, direct from Indianapolis to Salt Lake City. We got home yesterday around like 9 a.m. and it was just like for our 1-year-old. It's like, let's not put him through drive to Chicago, fly to Detroit to Atlanta to Salt Lake City, just because those are the only open flights. So we're like, Indy to Salt Lake City was great. Um, he was able to nap and hang out. It was one flight, not super stressful. We made it. We got to see everybody. My nephew had a pretty rough game on Friday night, which wasn't cool. But then on the tournament they played in Saturday, they won. So it all worked out. It was just nice to see family. Yep. And then today's the official 1-year-old birthday. So he's officially one today. So we got a little birthday surprise for his wake up. Should be cool. Yep. It was fun. And we're gonna try to, I mean, the goal is let's make his birthday feel pretty special, since Christmas is just a couple days away. At this time last year, we'd have been in the NICU the entire week. So we'll drop in and give some gifts this year to some of the families that are spending their holidays in the NICU for some of their kids. But yeah, crazy stuff. And it will be nice to have a little bit of hopefully a decompression. These next 2 weeks is just limited trading, some spot checking. Don't force any trades. We got some, good looking directions for the end of the year. Hopefully the market maintains this kind of positive trajectory. Am I guaranteeing the market goes to all-time highs by the end of the year? Not necessarily, but I do know some of the gamma levels that we're watching. Let me pull up. Okay, some of the big pin levels that we see going out to the end of the year. Let me go into the 31st. So there should be a pretty large level at the 7th. Yeah, look at this one. Can everybody see this one up here? This is the December 31st. This is 9 days out. This giant bar is the largest level. So, I mean, right now we're looking at some positive gamma that is at 6,900, which I think is good for us to think the market may be able to drift higher. And then all the way up here at the 7,000 handle, which, there's a lot that can happen in between 6,900 and 7,000. We don't necessarily have to get exactly to 7,000, but if this is where the market is, like if this is where flows are leading the market and this is where the drift is going to take us, then that butterfly spread, those year-end rally trades we put on could be nice and profitable. And I'd be happy with that. So I'm not looking to hold these all the way to expiration. If overall we have, $2 on a broken wing, $2 on a broken wing, so that's a max of $4 credit. Our profit traps would have to be at expiration within a perfect 5 to 10 point range. That's a tough one to pin, to be honest. That pin price would be 6,800 and 67.65, right? So price goes higher. We're just going to collect more and more of the $2 credit. The other trade was that $1.05 butterfly spread that if this one is offering, we did a 25 wide. So we potentially have, $24 of profit in here. But because it's early in the trade and because we're not at 69.75, because we're not at 69.50, then this dollar, even if it's offering $2 credit or $3 credit well before expiration, I don't mind just taking profit, profit, profit. Let's grab an extra $300 to $400, maybe more, have it for a nice little Christmas bonus, and good way to kind of finish out the year. I'm back up near high watermarks of the year. I've got multiple counts in six figures. Like I'm really happy with that. And that's despite having a pretty crummy Bitcoin, which honestly did take away a decent amount of my gains. I mean, I'd say I probably let me just do the math here. Well, I mean, realistically, about 100K. I mean, I had about a 2% swing in Bitcoin. So Bitcoin's crappy performance has probably cost me about 2% of profits in my overall portfolio, which might not seem like a lot, but that's a six-figure swing. So I'm not thrilled about watching Bitcoin suck. And maybe Q1 gets a little bit more interesting if Bitcoin does rally. We'll find out, right? If we go, maybe we can kind of work our way up into 95K again. Maybe we can make our way up into 100K. I don't think this is necessarily the bottom. I think that Bitcoin could still, have a dump consolidation, fail again, and then come back down to retest lows. But if we do retest lows, I'd be looking for either this level or a divergent bottom to then start, working its way back out. So I am looking for an active bottoming trade, but not necessarily looking to add a bunch of exposure. It's like I am, as this was falling, I've been selling a lot of premium and like protecting positions and trying to limit some of the downside exposure and volatility. So at the very least, I have about a 23% buffer in kind of saving the cost of my Bitcoin trades, which is why I've kept the drawdown. Although this was down 30% and 30% plus, I've restricted that drawdown to about 1.8%, which again, like overall, pretty happy with that. Now that does mean that I'm sacrificing some of the upside. However, I can also add, with better confirmation, I can add more positioning. I can, try to trade a good safe swing trade back to all-time highs. But I'm more in the camp of like, I'll treat Bitcoin like a trade. If the premiums stay this good, then I'll treat it like a trade. And I'll sell some premiums. And I mean, if I can make 20% a year on Bitcoin, great. If I do it with buy the shares and sell a covered call and I make 20% a year on Bitcoin, that's still pretty good, right? And we'll see. I mean, there is added liquidity into the markets. I think that's going to be a good thing for Bitcoin. We have a very pro crypto administration, but I don't think that the markets necessarily loved what was happening on MicroStrategy. Because they really don't. It's like this has been a 2 to 3 times levered Bitcoin, and there's essentially I don't know what this is technically called, but in the background with some of the financial engineering, it's like a weird what the heck was it called? Pipes, maybe. It's something where there's backing for whether or not MicroStrategy stays above like it's whether it trades at a discount or it trades at a premium. That just affects how this position is compared to Bitcoin. So right now it's like MicroStrategy is not looking great, and debtors at some point are like they want to get paid, and then if it forces MicroStrategy to sell their Bitcoin holdings to cover some of the debt that they've produced the last like 12 months or so, that's when things get really bad. Like that could be it could be like some type of spiral situation, but I'm hoping that's not the case. I mean, I had already measured out like a high, low, lower, high, lower, low. It'd be nice if this kind of stabilizes in here as well. But again, I think that is kind of a proxy to how Bitcoin is going to move. So if we're bottoming out on Bitcoin, maybe heading back into the mid 90s or 100K, MicroStrategy gets a little bit of relief. That's fine. I have a couple of trades in here. I think it's nothing crazy, but let me check and see what I have on MicroStrategy. MicroStrategy. I know I have a couple expirations coming soon. Let me go to everyone's accounts here. MicroStrategy. So this is a Jan 16. This one 155 by 140. So that's modified. Okay. 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 So this is the way I'm trying to lower my cost basis. I'm not threatening until we get down to 140. We're trading at 170 right now. Ratio spread. This one is Jan 16. So I've got the ratio spread. It's showing a little bit upside down. I don't really want more shares. I'll keep an eye on the put side. So 160 is kind of a key level for me. We'll see. I did that for Project Options Edge, so I'll be watching on that. All right. So that's no. I mean, I did a lot of work last week before I left on expirations. A lot of the stuff now is out into January or so. So I have SPX expirations. Those are out to the 31st. We have SPY expirations. We have some more profits rolling in on Project Options Edge with the end of the year expirations. I have some expirations here on naked puts. We're trading at $50. I might take on some puts here with a naked put combo 59, 6, 3, and 0. So if I take more shares of IBIT, I will immediately sell premium and just repair and limit some of the downside. So any assignment here, I'm going to sell covered calls. So for Project Options Edge, that's going to be our backup plan. If we take ownership, that break even price, I did the math on this. We collected like 850, 860 on this one. That break even price should be, 1 second here. So we'll go IBIT. Okay, so collected 850. Break even on that would be $52.37. So if I'm assigned on all levels, I mean this is out to the end of the year. So if I'm assigned on all four of these levels, my break even is 52.37. I will probably go in and do a $53 call and just repair it. And I just and again, it's like if I flip it for $500 or $1,000, I mean I'm gonna have 400 shares. So anyway, stuff. I mean, the year is never done. Like that's why it is nice to have a little bit of holiday break in the middle because if you let this market just dominate your life, like you'll never take a break. There's always something to trade. Gold and silver is making all-time highs. What about it's like I get it, but it is nice where the markets are probably going to be a little bit quieter. That we just let's see how everything kind of unfolds here. So VIX is making some fresh lows. That's encouraging. We're actually hitting some. I mean, some of the lowest lows we've seen in a while. Let's go VIX. Let's go VIX 1 week. When has the VIX been lower? It would have been summer this year. We were down into the 11s and 12s again. Oh wait, that's actually last year. Never mind. We have not had super low VIX this year. Wow. So our lows for the year, by the way, December 2024. That was after Fed. So the Fed kind of messed up the VIX last year. And then we have just had elevated VIX all year. That I didn't realize. I'm going to see if perhaps the VIX can hit lows of 2025. The VIX is down to like 14.2, 14.3. Then that would be like one of the lower VIX readings of 2025. If we have a holiday rally, that could certainly be the case. As we hit, fresh lows on the VIX, fresh highs in the markets, maybe we do get back above 6,900. Maybe we come close to that 7,000 handle that I talked about. Like that is a big level. First thing I'd like to address this morning is the year-end bonus trade. We have a couple of them. So let's go back to symbol. Let's go SPX. So we got one trade up $130. That is our rally above the 68, 67, 65 butterfly spread. So of the max $2, we're up 135. The year-end rally here, the max $2 with just the standard credit. We do have a profit trap there, but that's inside the profit trap day of expiration. So we're up 145 and 130. Like not a bad chunk of profit. And then the year-end rally here is up. I'm just going to take the profit. Honestly, if I can take the profit and clear $100 in each one of these trades, I will do it. So I pulled in $1.05. Let's see if we get out of here for 215 credit on that fly trade. So working order, I put it in at 3. Let's replace this at 210. That's at least 100% win. Let's go 215 perhaps. 210's 100%er. So let's see if we get 210. All right. 205 is $100. All right. I'm out of that butterfly spread for 205. $1.05 debit now closed out for 205. And then my broken wings. So that one is closed. I'll put these in the Zoom chat in just a moment. That $2 credits up 120 to 140. See if we can close this one down for, that'd be a, let's see, 65-cent debit. So you get it for like 65 to 75 cents. So I put a 50-cent debit. Let's replace this one. Let's try 70. That'd be $1.30 profit. It's going to go up in debits here a little bit. $1.20 profit. This is the 6,800 one that I'm doing. The 67.95. 85. And look, if you want to give this more time, you'll probably get more profit. We're trading at 68.65. If price goes higher, this just gets further and further out of the money. Okay. But look at my option chain right here. Can you see the expected move is still gettable to the downside? Right? Like we're trading at about a 25 and 20 delta. If something silly happens to the downside, these trades are still potentially at risk within like that one standard deviation move. So I'm just going to close this down, take the profit. 80 cents is not filling. Let's try 85. All right. A 90-cent fill gives us $1.10, filled at 90 cents. So $2 credit, closed out for 90, take another $1.10. Last one here for the year-end rally, $2 now trading for hopefully like 60 or 70 cents. Close. Let's try 60-cent debit. Working. 65 perhaps. 70. Come on. Filled at 70. Okay. So I'm going to put this in Telegram. This is in the general Telegram or my public Telegram for everybody. So we're going to do bonus trades here. Bonus trades. So we had broken wing butterfly. It was a 6,800. That would be the buy put. So 67.95 by 67.85. Entry $2 credit. Close for 90 cents debit. Broken butterfly. We had the 67.70 by 67.65 by 67.55. Entry $2 credit. Closed. This one closed out for a 70-cent debit. Oops. So $1.10 profit per contract and $1.30 profit per contract. And we had a butterfly spread. We did a 69.50 by 69.75 by 7,000. Entry was $1.05 debit. Closed at $2.05 credit. So $1 profit per contract. So nice little holiday grab. So it'd be $1.30, $2.40, so $3.40. $3.40 credit. I'm pretty happy with that. Right. And we're doing that after just a couple of days of being in those trades. Now, you can hold these trades longer if you want to. And what does price have to do? Well, price for the butterfly spread has to go up a little bit higher to get closer to that profit trap. If it gets into the 6,900 zone, this one is like optimized in the Christmas, or I'm sorry, I guess New Year's Eve, New Year's Day window. If we're trading between 6,950 and 7,000, this trade offers like $2,400 of profit opportunity. It's a massive reward to risk, which is great. I'm just going to take the profit, and so on the broken wing butterflies, because they are trading inside of the gettable delta, like a 20 delta, 25 delta. If the market just doesn't keep drifting higher, these maybe have some risk. And I'm already pulling in over 50% of the risk, right? So I've got $2 credit. I was risking 3 to make 2. So what's our return on risk? So we pulled 110. So 110 divided by 300. We had a 37% return on risk there. And then 130 out of 300, a 43% return risk on risk there. And then the butterfly spread was 100 out of 105. We had a 95% return on risk there. So about 38% on the broke wing butterflies. So about a 37% winner here, about a 40% winner here, and a 95% winner here as far as return on risk. If you want to hang on to them longer, where does price have to stay on this one by 12/31 expiration? It has to be greater than 6,800, and you can keep your full $2. This one has to stay greater than 6,770. You keep your full $2. This one you want to get into the 6,950 to 7,000 profit trap zone, and that pays a ton of profit potential. However, if we're not at 6,900, if we're not at 6,925, if we're not at 6,950 or higher, this trade is worthless. If we don't actually see by the time we get closer to expiration, like Christmas, or I said it again, New Year's Eve, New Year's Day, if we're not inside this 50-point profit trap, we will see $0 of profit. We're up almost 100%. I'm just going to take the profit. So we have a wide net. So we got it. I think that's fine, right? So anyway, I'm going to close out the trades. So there it is. It's shared. If you need that in Zoom chat, I can throw it in Zoom chat, but it's right here in front of your face. So if you took these trades with me, I literally labeled them as year-end rallies because I wanted to see, can price stay above 6,800? We got a pretty good fill on the butterfly spread. I'm taking the profit. Okay. Are they still valid? I mean, no, they're done. Like the trade's in, the trade's done. The trade was valid when price was down. I mean, we had pullbacks here before we had this little holiday rally. I mean, the pullback was all the way down to about 67.20. So we got filled at $2 when price was falling on the 6,800 handle. We got filled at the 68.65 handle. And then the trade that we took last week together, that would have been, I think, one of my last sessions. I think that was on Thursday when we were in session together on Thursday. Is I priced out looking at like the 6,900 to 7,000. And, we had a trade that was going to be like a $300 debit. There's a $400 debit, but they offered like $3,000 to $4,000 of profit. So I went a little bit more conservative. I only went 25 wide on the butterfly wings, and we ended up doing like the 69.50 by 69.75 by 7,000. So we added that trade in. So when prices were trading on Thursday, that trade was still good, right? Now, if you want to take that same trade, it's going to cost you $2. We got into the trade for $1.05. You can take the same trade for $2. Look, the $2 can still pay you $23 of profit. What has to happen? Well, for a $2 risk, price has to get into this 69.50 to 7,000 handle. And that window, like that is a $23 profit trap. Okay. So it's perfect at $23. You get, if price is at 69.75, you can make $2,300 on a $200 risk. All I'm looking for is, can price just keep going higher? If price can keep going higher, great. Okay. But what if, right? What if we hit 6,900 and the market's excited about all-time highs, but it doesn't sustain them? We hit highs again and then we fall. Well, I don't want to guess and require that the market must get up here. It's like, what if it doesn't? So I'm taking the profit right now. Okay. All right, look, this is in Telegram. These are the trades that we've had these trades running for a couple of weeks. So do you take these trades now? No, these trades are done. You've been with me for the last 2-3 weeks. We've taken all these trades. Okay, so I'm just going to put this in the chat for everybody. And so it's in the Zoom chat for everybody so you can see it. It's in Telegram. This is my public Telegram here. You can see it. Okay. And that's a nice little holiday profit, right? Could it be more? Sure. If I want to wait until the end of the week and see if the market is at, 6,900, it's like great. But on the broken wing butterfly spread side, it's like if price gap fills, let me recenter this thing on a close from last week, by the way. Close last week was around 68.33. Okay. Let's look at some live gamma. Yeah, so it's the trades, those bonus trades are bonus trades. They're not daily profit trades, right? So they were posted here. I mean, you can go back in my Telegram and see, Bueller year-end rally. Here's a low risk, high reward setup. We took that last week on the 18th. Before that, the week or two before that, these trades were on the 16th. So literally last week, we took trades. Broken wing butterfly, and the butterfly spread. Okay. So they were in here on my public Telegram. If you're daily profit play, we just continue to do our standard grind. So on that note, today, plus minus on the day, we saw plus or minus 27 coming into the morning. So plus minus like 27 and change is going to plus minus 28. Let's go to today's trading. Today is the 22nd. And market's looking about a 21 point move. I'm going to take a look at some live gamma. Okay. So if you're not in this Telegram, here's the link for it. This is the one that I post this one all the time on YouTube. So Chris Pulver Telegram. Okay, so you can join that one. All right. And then our gamma for today, there's not much, right? It's pretty much we opened at it with a gap higher. We might have some movement today. We might not. It might be within that plus or minus 20 point move. After basically surviving the last couple of weeks and watching so many days where the market maker move was not expected, we had multiple days well outside the expected range. I'm just we just grabbed $340 a contract on a holiday rally. I'm happy with that. Let's, I don't know, I'm just going to lighten it up a little bit. I'm sitting near fresh highs again. Like I'm pretty much, near highs. And that's again with like Bitcoin not performing. It's like I'm still creeping up on fresh highs for the year, which I'm pretty happy with. So all this is good. I'm happy with this. So here we are like this week. It's like we're going to trade what? Today, tomorrow, and then come back and just talk on Friday. It's like I don't think there's any reason to force a trade. Okay. The market doesn't have to. The easiest trade for today is like nothing happens. But you never know that, right? It's like, does the market care? Does the market care about efficiency? Probably not, in all honesty. The unnecessary amount of volatility could be we come back down and fill the gap, and then we stabilize in here, and there's your plus minus 30 points for the day. If we're lucky, the market just uses, okay, we open up here, we have a little bit of a pullback, maybe find some of this price action, and then positive gamma, right? Since we're above 68.30, positive gamma. So that is the, sell puts, sell calls, let the market drift higher environment. And with VIX at some pretty decent levels to the downside, we're at a 14.8 VIX right now. Unless the VIX is going to rip to the upside, it's like a 15 VIX, a 14.8 VIX. I wouldn't be terribly worried about the market making a big move, right? We don't have any pressing news. There's no major highlighted events this week. From all I saw on the news calendar, I think we had a GDP print this week. So Tuesday, we have quarterly GDP in the morning. So we'll see that before we start our session. So all this, prelim GDP, quarterly GDP, medium high impact news at 8:30 a.m. That's Tuesday. Wednesday is Christmas Eve, and banks are limited. Trading's limited until I think 1 p.m. And I'm not going to be live. Like there's no live session on Wednesday, no live session on Thursday. So I think what we'd like to see is, no major damage today. Maybe markets are pretty chill for Monday. That's fine. Let me see what we can look at today. Could I get something like and maybe this is a decent trade. Um, if we had limited movement, the market's going to move maybe 20, 25 points. If we did like a 30 to 40 point move, could we get something like a broken wing that actually looked kind of good? Okay. Honestly, I'd rather go to the downside. Gamma's around 68.30. Could I do a 30, 25, and 15? Right now, that trade's offering about 15 cents credit. So I don't love the trade. It's like I'm not going to take the trade for a 15, 20 cent credit and risk 480 on the trade. That's stupid. So if price were to fall and get me filled at, a 14 delta, it's like I should still have a higher probability trade here, but price would have to come back down to, fill the gap, test this positive negative gamma pivot. And if it offers any support, whether it stays supported here, if this trade can give us, maybe $1, if it gives us $1, I think that's not a bad trade, right? Or you take your chances on something like this, which is sell at the money, and we have a 20-point move. So you buy 20 here and you buy 20 here, and you pull in 1390 on the day. You risk $600 to make 1390 if price stays within this expected range for the next. I mean, it doesn't have to be the whole day. That's the riskiest trade. But if we stay within about 14, 15 points of this trade, you can make a ton of profit. If you want to make it a little bit cheaper, you go one strike different. And then you go, that'd be 25 wide and 25 wide. So it costs you max risk 735, 1275 is your potential profit. Because you're pulling in a little bit more credit, you get about an 18-point buffer, which is around the 6880 handle. Anyway, I'm just saying, if I did a typical daily profit play, you're going to be very, very close to the 25, 30 points out of the money. Watch. If I did a 10 delta, that's going to be about 30 points out of the money. Is this trade, is this a safe trade? It should be a safe trade. So my call side, my put side, my issue with this is I'm not going to pull in enough credit, right? Like to take this trade pending right now, only get 65 cents on it. I'm going to risk more than I want. So if I take this trade, I'd want $1 credit, not 65 cents. So if I put the trade in here, it's not a bad positioning as far as being somewhat delta neutral. Okay. But I don't want the trade for 65 cents. The flip side of that would be maybe going a little bit higher delta. Okay. A little bit higher delta, and then trying to get filled at maybe 2 to 250 and risk, I don't know, 1 to 1 would be tough. You'd have to probably tighten that up a little bit. So anyway, my daily profit play members, if you want to take a trade, you know what to do. Find your deltas, sell your range levels, and manage your partial profits, right? Because the VIX is low today, because the plus or minus is low today, I'm not pulling in the premium that I want. Therefore, it's not really a trade that's probably going to fill. If I did a 9 delta call and I do my 10 delta put, I'm trying to do a 10 delta, but it goes from 9 to 12 here. So if I do a 9 delta call and a 10 delta put, broker says I can get 60 cents right now. Well, I want $1. So if I do take this trade, I want $1. My issue with this is during these holiday times, if this market decides to go somewhere, okay, especially to the upside, this is where a lot of the risk falls on holiday trading. You try to call the top or the bottom with a range trade, and the market just drifts higher. It's not a fun trade, right? Now, that being said, a VIX around 15 today, okay, a VIX at 15, there's about a 0.94% move is like the maximum. So if I wanted to put a defense trade in today, let's go 15 VIX. That's about a what? 0.94% move. Let's take the gap open. Take the gap open. I don't mind putting a trade out here for a pending order. Gap open and go gap open plus the 0.94. To be safer, I'll go 0.95. That's about 69.30. Okay. And that's a VIX at 15. Now, the actual, I mean, the VIX is trading at 14.68. We started out this morning with the VIX around 15. I think that's pretty safe. If the VIX continues to fall, that chart alarm is one of the lower prices of the VIX this entire year. I could see us getting there, okay? Which means I want to be measuring like that upside risk. Steve says found a bunch of fake. Yeah, I get it, man. But you have to know, like you talk to me every day, right? So what I mean, you talk to me every day. I have my members only Telegram for alerts and services. So my Project Options Edge, my Pinch Point, and my Daily Profit Play have their own Telegrams. Okay. This one is my public one. That's the only public one that my team feeds these links to. But you can see me every day. You can see me in Discord. You know where I am when we run these live morning sessions. So yeah, there's gonna be fakes. There's gonna be imposters. I get it, but you also know that if you need to ask me a question, my email is chrispulver@gmail.com. We're live almost every single day together. You can hit me up here, right? So nobody should think that they're having this conversation offline with me when they're not, right? Come in and ask me live. Chris, did you message me? No. Did you? No. If it's crypto related, absolutely not. Like biggest obvious red flag is, starting a conversation, then it turns to crypto. Well, I could do this for you. John, Steve, Tim, it's like it's crypto scam, most likely. It's on WhatsApp, it's on Telegram. It's unfortunately that's what happens. But I'm just saying I put my public channels out there trying to make it as easy as possible to follow. All right. So potential top today around 69.30. If we wanted to look at that as I mean, it's going to trade for next to no credit right now. But if I wanted to kind of call the top on a defense trade today, we don't need a defense trade because we don't have a daily profit play in. If I wanted to call that top, I wouldn't mind doing a 30 by 35 by 45, like that broken wing. Okay. Or if I did just a 35 by 40, like this 5 wide credit spread, as long as this fills for, $1, $2, I wouldn't mind this trade. So when I'm kind of calling a top or bottom, I like the defense trade. So if I go 30, 35, 45, I'm going to take this one for $1 credit and see if it will fill. Okay. And then price action on the day. Do we come back and gap fill here at 35? So let's see if I can maybe position something a little creatively here. Let's go 45, 35 by 15. Crazy, right? So that's 10 wide by 20 wide. Yuck. Well, this is what I wanted to try to do. If I get a 10 wide, this would have to fill. That'd be it. So that profit trap would be $1,000 if price was down to 69 or 68.30. That's $1,000 profit trap. But that trade is only offering 5 cents credit, which I'm not going to take the trade for that. I would at least need, for this risk, I need at least 50 cents, preferably $1. And that would be roughly trading about a 12 delta. I'd have room down to about a 9 delta for any type of risk in this trade. I'll do this. I'll do 35 by 25 by 05. So that's 10 wide, 20 wide. I don't think this is going to fill, but I'm going to try it. So that would get us down to a 7 delta put side. I don't know. This is kind of a stupid trade. It's a good profit trap. It's a high probability. The problem is I'm guessing little to no volatility today. If it drifts higher, awesome. If it drifts nowhere, fine. This is just like a nothing trade. Most likely nothing's going to fill. And that's okay. Like it's okay. Look, we just took profit, 3 winners on year-end rallies. Great. And we took it early. So that's it's less stress for the holidays where it's like, oh, those 3 trades Chris took, what do I need to pay attention to them? You can, but I'm out of them. So I don't know. I don't mind calling the top, right? And if we want to do the same VIX on the bottom, you take your gap lower, or so you take your close from yesterday or Friday rather, and then go down your 0.95. So that's around 67.70. Okay. And that again, this is the VIX at 15. Just be cautious on this one if you're calling the bottom. If the VIX obviously is rallying up, this is not the safest low to call. Okay. So I'm looking within like the market maker move. I'm looking at a slow Monday. We're coming to the holiday week. Things should be pretty chill. So I'm not going to place this. I think that's a little bit wider, but I'll place the topping trade. I'll do the 30 by 35 by 45. I'll do this trade here. So buying the 30, selling the 35, and then buying the 45. That's a broken wing. I'm asking for $1. Okay. Again, that one probably won't fill. If price is slow today, it's probably not going to fill. But if price goes up, that should be about the maximum of price going up based on that VIX calculation at a 15. Is next week going to be more? No. We're not going to have a normal trading week until like the 5th or 12th of January. And it's okay. I mean, look, when you do this stuff full time, you need this. Like you need this break. You need the market to give us some holiday trading. You need the market to chill. Like this shit is exhausting after year after year after year. It's like, because honestly, whether you had a great year or a terrible year, your goal is let's make 2026 the best year we can. Like mentally, get it right. It's a clean slate. It's ready to get fresh. It's ready to grind. I mean, I want this little breather. So I don't want to force trades. I want to, enjoy my kid's birthday, enjoy the holidays for the next 2 weeks. And yes, I'll spot check. I don't think the markets will do anything really silly or surprising. I hope that they don't. We got through the Fed. We got through inflation data. I don't know what's left. It's like if we look at high impact for the rest of the year, what is left? If we go this month, is there anything left in high impact? Okay. So let's go to where we are currently at. And we're coming into Christmas. So obviously Thursday, like Wednesday, Thursday, bank holidays, Friday, limited trading, mostly bank holidays. So we have FOMC on New Year's Eve. Awesome. That's Tuesday the 30th, FOMC minutes. I mean, okay, fine. Unemployment claims. So markets are closed. I want to say New Year's Eve. This is New Year's Eve 31st. So Tuesday on the 30th, Wednesday the 31st, New Year's Day on Thursday the 1st, the markets are closed. So that's it. Like, I don't think any of these news events are going to be a reason for the market to do anything silly. I don't. So it's path of least resistance. So our trading for the next couple of weeks will be, I don't think it is worth trading Christmas Eve, Christmas Day, New Year's Eve, New Year's Day. It's worth checking my phone. It's worth looking at my computer for, a couple of minutes, but it's not worth trading. I'm not going to zero DT trade, right? I'm making portfolio decisions. I'm getting, accounting stuff ready for the end of the year. And just enjoy the melt up if we get it. Be ready for some, position into 2026. Let's make some good decisions. Okay. So here are my thoughts for, the rest of this week. Will this market be back? Will this market be back to these highs? Yes or no? Right? If the market's going to be back to these highs, great. That's a great way to finish off the year, is at highs. So how we got there, it's like, okay, we had a nasty move in here. It was a test of that support level that we talked about. Okay. Got a little bit ugly. I mean, I didn't love the candle closing down there, but then we had a pretty big gap and we followed through last week. So having another gap higher today, let's just talk price action. As long as price stays above 68.30, write that down. If we are greater than 68.30, okay, I think we're going to be in a positive gamma holiday drift. So if we're above 68.30, things look pretty encouraging. To maybe, pull back and test it, okay, fine. But if it shows support from there, we're running after that 6,900 handle, which, by the way, this close right here was our highest close of the year, right around 69.01. Okay, there is a massive pin. There's a gamma pin at 7,000 from a JP Morgan collar trade. If prices are going to kind of try to reach that, it might reach it. It might not. I don't know. But it's a pretty big level. And so 6,900 to 7,000 is a big positive drift environment and a positive gamma environment. So where do we need price to stay? Well, that is our profit trap from the butterfly. I just closed it out, so the trade is done. But if you want that trade to run, it's a huge reward opportunity if you're interested. I don't know. If we're up to 69 plus by the end of this week on Friday, you could probably see, I don't know, $500-$600 of profit out of a risk of $100. But it gets more challenging if you're trying to hold it all the way to expiration, because you got to be inside that perfect little 6,950 to 7,000 profit trap, and we may not be there. Okay. All right. So it's okay taking a little bit of a break. Guess what we're going to do next year in zero DT trading? We're going to trade every freaking day. Guess what we're going to do in waterfall? We're going to trade every week. Guess what I'm doing in my new service in January? We're going to trade every week. There will be plenty of trades. Okay. I think a little breather is okay. Okay. I will say this. When the market does something silly, I will gladly come back on and do a live service. I will gladly come back on and do a video. But if we're going to deal with this for the next couple of days, I'm not that interested. Right. I mean, it's great for daily profit play. But if I can't get filled for my, 10 delta at $1, that's going to be some days that I don't get my trades filled. And I'm okay with that. But this is not normal trading. We literally just got through a couple of weeks where, 5 out of 6 days, 5 out of 7 days were beyond the market makers or expected moves. So that is not market efficiency. That stuff probably likely returns January 5th or January 12th when the markets resume, post-holiday trading. Back to the grind, back to the full-time trading again. That's the break. Okay. So hopefully your rally is coming. Yeah, I mean, and we're having a bit of it right now. That's good. The technical Santa Claus rally is, everyone thinks Santa rally is like Thanksgiving onwards. It's not. Technically, the Santa rally is Christmas Eve to New Year's Day. That 7-day window is supposed to be the Santa rally. So if we get it, Santa didn't show up last year, didn't show up the year before that. December was negative last year. I would imagine December is going to be positive this year. Here's a monthly candle. So far, the month of December is green. Okay, so if we stay green, that's what I would expect. The low for the year so far is, this is we opened at 68.12. So, I mean, I'm trying to be an optimist here. It's like, I think that the market would not likely give us 2 Decembers in a row that were negative. So I could see the market staying above 68.12 to close out the month. If the market's up to 6,900, even better. But staying above, it's great too. Right? So the open here is 68.12, which again, you go back to those broken wing butterflies. If we're above 68.12, we make full $2 on those 2 broken wings. Right? So, all right. Here's what else I'm going to sprinkle in. I want to get a little breather here. We've got waterfall income class at 11:30, and I'm going to be on with Lance around 1:30 today. And I do have a waterfall income masterclass I'd like to schedule. I'm going to try to sneak it in tomorrow. How many of you would like to do a waterfall income class? Let's do this. I'd like to do a waterfall income class like pretty early, because I don't think the trading day tomorrow is going to be super exciting. So if we do our daily profit play in the morning, I'd like to just kind of jump right in at 11 a.m. and jump into a waterfall income class. So let me finalize that for tomorrow, because my sister's in town. I think she is flying out tomorrow, and I want to make sure I get her to the airport. So let me see what those flights look like for her. It might be an early flight, which is fine. Anyway, the goal is before we go on our little, Christmas Eve, Christmas Day break, I'd like to get a waterfall income trade in. I do have a bunch of new members that joined me last week. So let me finalize the time for that. We'll look at flights today for her. I'll try to figure out when I can get in a class tomorrow. So today, let's do a little recap here. Today, I will have waterfall income live session, 11:30 a.m. And I'll be live with Lance. It's going to be a Stonkomania at 1:30 p.m. Eastern time, Israel Eastern time. Okay, those are today. And then Tuesday, I will schedule a waterfall income masterclass. So I will get this on the book. I'm going to figure out what the schedule is going to be best to do. But that way we can have a nice combo like strategy 1, strategy 2 class, new members, nice big welcome. We'll try to look at a live trade today during our Monday session at 11:30. And we'll go from there. Okay, let's do this here. Okay, one sec. All right. Nate says, what's the play for today, if any? Well, the play for the day was managing our profits from those bonus trades. That's my play for the day. Because right now, look, the only real alternative I have right now, if I wanted to place a trade for today, here's what trade I do have. I do have a pending broken wing butterfly near the top today. So this is a trade that I have. I mean, technically, this would be a daily profit play defense trade, but I don't even have a daily profit play trade to defend because I'm not taking the trade on an 18, plus or minus 18 move today. That's only going to offer me like 60 cents credit. So the trade I do have is if there's upside risk, I'm doing a buy. So this is SPX for 12/22 expiration. I'm buying the 6930 call, and I'm selling the 6935 call with 2 contracts, and then I'm skipping the strike and going buy 6945 call with 1. So it's a broken wing butterfly. I'm looking for $1 credit, and this is calling the top with a VIX less than 15. Okay, VIX right now is trading at 1455. We're not that far away from actually having like one of the lowest tests of the VIX of the year. Okay, so on that note, I should set a chart alarm to make sure that if the VIX goes back above 15, that I can make a potential adjustment to that risk. Right, but I mean, we know the correlation is if the VIX is going up, we're probably going to see price going down. I'll say that again. So if the VIX shoots up, if it shoots up and we break above 15, most likely the S&P is going to be falling down. Where to? Well, probably to the 6840 past resistance area, possibly to the gap fill around 6835, possibly to this test of positive negative gamma around 6830. I wouldn't expect the market to go something still like stupid today. If it's going to do anything directional, this area maybe offering some short-term support, but it might go nowhere. So the only way I could really play that would be, one, if I'm looking for a bottom, I kind of look to see if there's support there intraday to kind of scoop up a bull put spread or something along those lines. Or you're already selling premium in the middle, hoping for a range. Because if the market today just does absolutely nothing, then whatever range you can get on that, like an iron butterfly, perhaps, would be pretty effective. Or a tighter daily profit play, like a higher delta. If you did a 20 delta today, a 15 delta today, that might work out just fine. So here's an example. If I go Call side, here's a 17 delta. Put side, here's a 17 delta. So technically I'm delta neutral. I don't love this, right? I get $1.30. I'm risking 370. I don't love that trade. I'm not going to take it. But if I went 12 delta, 17 delta, or 12, I mean, if I went 12, 12 delta, it's like I get 80 cents. I don't love it. The last, what, 3, 4 months of daily profit play, it's like I've just been particular on my deltas and my credits. I'm trying to manage my risk. So I'm just pickier. And in holiday trading right now, it's like I'm picky. I don't think we need to force trades. Okay. All right. Let's see here. Pete says 15 delta, 10 wide, 85 cents, bought back at 40. Good. Great. Nice little, what, 50% winner? Awesome, man. Good stuff. Okay. Let's do this. I'm going to I'll take a little breather. We've got a stream lined up for the day. Blake, I'm just going to pass on that, dude. I'll get a waterfall income scheduled for tomorrow. I want to get a little slides put together for Lance's session this afternoon. I do want to talk a little bit more on income grid for a moment. So give me 1 second here. So income grid. I don't know if that's the official name for it. We've talked about it a little bit. I'm going to look to see if I can get a trade running for this week in income grid. A lot of these trades have done extremely well. We're winning about 70 plus. Hang on a second. Where's my other? Got to find I've got another back tested tab here. I'm looking for it. Yep, this one's decent. So I have the income grid strategy winning up to as much as 78% of the trades with a 1-to-1 setup, which I'm really happy with. And that's literally from 2020 to now. It's a lot of wins. And, the market needs to move basically nowhere. I mean, if you get filled in these positions, we could have maybe a 0.2, like a 0.2 to 0.3% move, offer us a 1-to-1 trade, and have these trades win about 70% of the time. That's not too bad. So if every trade, and I do this from, like I've talked about this before, like if we're doing a weekly trade or a monthly trade, or we're even looking to go, supercharge this on a daily position, which I'm not going to trade the daily personally because I already have enough 0DT stuff going. But you could supercharge this if this is your only service. You could do a daily trade. You can even do a quarterly trade for the more passive trader. Okay. I'm going to focus primarily, I'll asterisk the monthly and I'll asterisk the weekly. All right. Those are the levels that I want to trade primarily. And I'm looking for a minimum $2 credit out of a $5 wide, right? So it'd be $2 credit. So profit versus $3 max risk. But ideally, I'm going after 250 credit on a $5 wide, which means I'm going 250 profit versus a 250 max risk. Okay, this is what I want. Okay, I'll put the asterisks up here. This is my ideal trade. Say there's nuances, right? I mean, I can accept $2 credit, but I would prefer 250 just because the risk reward is way better. Right? So what I plan on doing with this trade is looking at either calculating levels Friday or pre-market Monday. And I'll have a member Telegram, and then I have a member Telegram for the orders. And that's it. And then we'll have lots of masterclasses. Live training, and some, content education to go with it. So it's really not a terribly labor intensive service for me, which is great. But the touch points, between the levels in trading early in the week, whether it's an end of day Friday when the market's done, I can calculate all my levels, get them ready for next week, or it's a Monday trade. We are looking at starting a weekly trade and a monthly trade. I'm probably going to do both of them. I will probably do a monthly and a weekly, because let's say that I lose a weekly trade. Let's say out of a month, we have 4 weekly trades, right? Let's say I lose one and win 3. But if I have a monthly trade that wins, I can wash that loser, especially if this is my reward to risk. That makes sense? So it's not a lot of risk here. And, realistically, we can trade SPX. These would be 5 wide spreads. We can trade XSP. These can be up to dollar spreads, right? Or more, but you can do dollar spreads, so tighter risk. You could do SPY. You could do QQQ. I'm going to focus primarily on the S&P 500. You could also do ES. You could trade futures, and you can even trade micro futures. So I'm not saying that to complicate this. I'm saying that there are ways to trade whatever we want. If you want to be more cost effective, if you trade futures options is a great way to be cost effective, right? If you want to tighten up your risk, trade XSP versus SPX. And you could do, my levels here. It's like I could do a weekly trade every week and a monthly trade every month and risk no more than, like, if I did a weekly trade every day, or I'm sorry, a weekly trade every week, that'd be 4 trades. That's a maximum risk of about $200. And then through a monthly trade on top of that, my max risk for an entire weekly service and monthly service would be about $250 on the lowest end. So very, very cost effective. Does this make sense? So obviously you can scale this up, scale this down. You can trade SPX and it's worth a little bit more, but tax benefits on the cash settled instruments would be solid. So SPY, super liquid. But even I just had this happen to a member last week. We did a SPY debit spread, and the member got assigned on a debit spread, which is annoying. Like, debit spread should have like a less than 5% chance of assignment. They got assigned short shares on a debit spread, which was a winning trade, by the way. So what's dumb is the broker assigns them 100 shares short, but they still had a long call, which was in profit. So they close out the shares, they close out the long put, and they still grabbed 99 cents out of the dollar max profit. The fact the broker did that is like a huge inconvenience, but again, it was a winning trade. So debit spreads, even trading debit spreads, there still is an assignment risk. Even trading credit spreads on SPY, there's still an assignment risk. Less of an assignment risk on ES and MES because they're future settled. Rarely do they get assigned. But if you don't want any assignment, then we can just focus on SPX XSP because they're cash settled, they're index trading. That makes sense? Okay. All right. Good stuff. Okay. Any questions on this? We'll spend some more time on this in the coming weeks. I'm looking forward to this. This is, honestly, to me, it's like, what can I do to make 2026 simpler? What can I do to make 2026 still profitable? And I mean, this might be a little, unglamorous or not sexy, but this is a bullish environment. Okay. And then we have a indecision, which we stay out, or we have a bearish environment, which we stay out. Okay. Now, indecision, I mean, I'm still the teacher here. I'm still the trader here. If we are coming down to some key levels, I don't mind throwing in a trade, right? Like if we've been correcting, we're coming into like a 5% correction, a 10% correction. I don't mind throwing a test out there for the week, right? If we've had a 10% correction, the market's probably going to have a reflexive rally for a week. We can probably, snag a winner. But in the bigger picture, after testing this thing for nearly 10 years, I have seen that in an indecision environment, you don't need to force trades. In a bearish environment, I did trade every bearish environment bearish, and it was about a break-even result with hundreds of trades. Every time that's my macro dashboard lined up bearish, I still traded everything bearish. And I had weeks where it's like easy winners, markets making lower highs and lower lows, awesome stuff. But then when we have the bottoms are forming and the market rips to the upside, and my macro dashboard is trying to like catch up with some of the indicators, I just end up stacking up like trades at the bottom where the market goes higher and I'm still trying to sell. I get beat up on a couple of those grids. So I just found out like it's not worth forcing bearish trades because the timing of a bear market is so difficult. The bear market could last a month. Like we have those big V bottoms, or the bear market lasts a month, or the bear market lasts, 6 to 12 months. But even in 2022, when we were bearish primarily from like April, like March, April, we started to roll over aggressively like March, April 2022. Everything kind of peaked out in like February, March of 2022. We rolled over for 10 months, and it was everything was like perfectly aligned for bearish environment. It was like a 60% win rate, which was fine, but I didn't love like feeling like why aren't we making more money? When if we just stayed out, we don't have any drama. We're not guessing. Like just let the market bottom out, let it find its footing, and let's go for the next. I mean, if you waited for the bulls to align in 2022, you'd have been trading roughly October, November 2022, and you would have been able to stay pretty consistently bullish, literally to April 2025. That would have been our last big scare, right? That's when we started to see like the test of like the 50 and all the death cross stuff was tested in April 2025. So all of 2023, all of 2024, through 2025, and up to like February when things started to roll over, technically aligned, we'd stay out. But then once we got into May of 2025, May to now, it's still bullish, right? So crazy stuff. All right. Davis's question whether SLV trade silver being yeah, I mean, you want to roll it. If you want to roll the calls, David, roll the calls. But right now, if you have a bull call spread, like I mean, that one has a lot of time on it, does it not? The SLV trade is sitting in profit, but we have a lot of time in those trades. I'm really not that worried about it. So silver is going to be an interesting trade in 2026. I mean, it's hitting all-time high. So is gold. Clearly, the market loves it in some capacity where it's like, I mean, I just feel like if you're getting in now, you're chasing, which I don't love. So what I'm going to do instead is I'm going to wait for gold and silver to pull back to any moving average, and I will, dollar cost average accordingly. Right? If we see dips and pullbacks, I'll trade options. I'll sell puts, I'll do ratio spreads, I'll do my income trades. But I'm not going to buy a chart that looks like this. It looks like this. If you're lucky, it goes sideways, and you can buy the breakout with a tight stop loss and try. It's like that's like the aggressive like trading participating, but we get so far away from these moving averages, like we'll have something that court causes a dip. I don't know what it is. I don't know what top and bottom is going to form, or why gold to top out, why silver tops out. Outside of it's getting driven by crazy amounts of flows right now, but the charts look insane. So I'll just wait for something to kind of return to some better support and better structure, and I'll trade it then. Yeah. So yeah, we can just roll that call. Let me see it right now, actually. So let me go. I know I have this trade in. So SLV here. So I bought the shares. I've got the protected put. So that one is fine. What was the modify that I did? Let me find it. Here it is. So this March one, right now, so we're up to 62. I mean, I could roll this. I could probably roll this out to like April or May. So this one is protection that I'm not going to get or need. So that protection is worthless. On the call side, I mean, I have the shares. I bought the shares at 47. I'm covered at 51.50. Remember, I pulled in 7 cents on the collar, so I'm still making on this trade. If I don't do anything, okay, if I don't do anything on the trade, I bought the shares at 47.01. I pulled in 7 cents. I own the shares at 46.94. I'm getting them called away at 51.50. I'm still making $450 by March 31st, which right now has about a what? There's about an 80% chance that it stays above 51.50. Okay. That's by March. So if I wanted to roll this for more income, that's fine. That's fine. So let me see if I can roll. And I want it to be worth my while. It's like, I'm going to roll it. Let's keep the 51.50 strike. So we can just look at the 51.50 call. I have the shares. Let me roll this. So if I roll, let's do a quick roll. If I roll this out in time, so I can roll this out to April, same strike, get another 25 bucks. So I make $480. If I roll this out to May, same strike, I get 60 cents. Okay, I make another 60 bucks. Now I'm making over 500 bucks. The delta on that trade, if I roll it to 51.50, I mean, you can see here that it's deep in the money, right? Is it still inside the expected move? Like, yeah, if silver has like a nasty pullback, we're still inside the expected move. So right now, I feel like it's probably just good to just wait it out. Because if we have pullbacks, I mean, I established a position at 47 bucks. That was one chunk of many that I want to reestablish. So if we go into March and we're still above 51.50, we're going to make 450 bucks. I don't think the premium is as good by rolling silver like it would be like rolling a Tesla or rolling the SPY or rolling the Qs. So I'm just going to hold off on it. Yeah. I don't think there's a reason to jump in and just immediately start rolling calls, because what you get stuck in is you don't have the luxury right now of going in like week to week to week to roll calls. Like literally the rolls I have, I can roll out to April 17th. Okay, and that's going out an extra 20 days, or I can roll out to May, which is an extra 50 days. By the time we come into March next year, we're going to have weeks to weeks to weeks after. So we should have like an April 7th expiration, and then April 14th expiration, April 21st expiration, something like that. So we can be a little bit more precise on those expirations versus trying to just take in an extra 60 days right now. I mean, sure, go out 50 days, you get 60 cents credit. That's cool. But now you're going out far enough in time that the expected move could still get us back into this trade. Like this may not get called away. You lower your cost basis by 60 cents. Your break even's now like 46. We could still be inside that. Like if it's not getting called away, then we go back to owning shares, add more covered calls, just keep playing around with it. So I just think right now there's no reason to like add more time. I want the expirations to get a little bit more precise, week to week as we come into like February, March next year. Okay. Do we put in a different protected put? I mean, you can, but what are you going to do if you put in another protected put? If you put in a protected put, you're just going to eat into your profits. The best way to put in a protected put, honestly, would be like a super cheap, high reward, low risk butterfly spread. So here's what I would say: this trade, and again, you're getting into stuff like we don't need to do anything right now. This put expires on December 31st. So if I wanted to make this a cost effective trade, what I could do is go to my March 31st expiration. Okay. I know that my risk is essentially below 46 bucks. Okay. So if I buy the 46, and let's say that we balance this out from like 46 to 40. If I buy, sell, buy, so that's 3 wide, 3 wide. Let's do 2 on this contract here. Here's a pretty good way to protect your profit. I can pay 60 cents. And these bid ask this is way off, by the way. This should be a debit because this is a butterfly spread. So I'll worry about this maybe in a week or so. If I paid 60 cents to make 300 bucks, like that wouldn't eat into my profits too badly, but I'd be able to lower my cost basis by, $2.50 to $3 of defense, which isn't bad. I mean, if I lower my cost basis by $3 out of a $46 cost basis, 46.50 cost basis, I mean, I lower my risk by 6.5%. That's not bad. So there's cost effective ways to do it versus just doing another collar trade. I think right now, because price is going to the upside, if we could just keep rolling calls when it's appropriate time wise, we do that. We just roll calls. But if I wanted something like to guarantee some protection, I just put in a very cheap butterfly spread. And if I want to go a little bit wider here, like here's 5 wide and here's 5 wide. So I mean, again, the bid ask, I don't really know what this is going to cost me, but it's like I could probably have a trade that costs me 50 cents to make $5, right? So it's cheap. It's instead of making $460, I'll make $410, but I have protection below my break even. and that would help. Okay. So anyway, we'll talk through it. It's a trade for Project Options Edge. We'll talk through it. We'll figure out what the best way is to kind of put on those positions. Okay. All right. I'm gonna bounce here. I've got about an hour before our waterfall income. I'm gonna go up and say happy birthday to the kids. See what's up for the morning. I'll be back at 11:30. I'm gonna get a little slide deck ready for Lance this afternoon, and we'll talk again tomorrow morning. Okay. All right. I mean, so far of the day, what's happening? Nothing, which is fine. Did I take a trade this morning on daily profit play? No. The trade I wanted to take was a 10 delta, was offering 60 cents. I didn't take the trade. So I've got a defense trade into the upside. I didn't do anything to the downside. I'm just going to chill. And if price fills me on anything, cool. I'll look at it. If it doesn't, it's okay. I wasn't going to settle for a higher risk day. We took 3 winners today on those year-end rally trades, which I'm totally happy with. And if you're letting those run, that's fine. Just spot check them. I have them in here, right? So if we go SPX, I have them in here to reference. So obviously I'm curious, like, okay, closed, closed, closed. I want to keep an eye on them and see, like, if we held them longer, what do we get? Well, out of the 2 broken wing butterfly trades, we're just going to get a lower debit to make more profit. And on the butterfly spread, if we have a higher credit, it's going to be more profit. But I'm happy with $340. We held the trades for less than a week, and it's a good win. Okay. All right. Pete, the plan is if we do the calculations on Friday after market or pre-market Monday, the trade is I'm going to put a pending order in on Monday. Yep. I want those income grid trades to be like Monday to Monday. My monthlies, I'm going to go like the Friday or Monday after a monthly expiration, go out the following monthly cycle plus a week. So I want to give myself a little bit of a buffer, right? So not just a Monday to Friday, because I think that's it's fine. Like that window's fine. But a Monday to Monday can sometimes get the market. Like if the market has a rough week, Monday to Friday, the market finishes red. That next Monday might finish positive. Like we might be able to save it, get back to break even or better. That's why I saw the win percentage is pretty high. Ken says, if you sit your nephews down for education on how the Fed manipulates bond yields. Yeah, that's fair. Okay. All right. Waterfall income. I'll see you in a little bit. See you in about an hour. If you want to join Lance and I for Stonk Mania, I'll be live at 1:30. See you in a little bit. All right. Bye.
All right, folks. Trying to figure out what we're doing here. I don't know what we have going on. So I guess everyone's good to go. I didn't see anything posted in here. So, all right. Well, we're out. I mean, yeah. Got a link for anything. I mean, does anybody want to watch like Newsbreakers? Anybody interested? I can put it on. Oh, of course, I don't have that recording. All right. Well, that's it. Ladies and gentlemen, have a good one. We'll see you tomorrow. Happy holidays. Merry Christmas.